What's going on, guys? Today I have another exciting video for you. We are going to be talking about Google stock and why I keep adding to my position. We're going to go over some comparisons where Google compares to the Dow, the S&P 500, the NASDAQ. We're going to take a look at Google's balance sheet. We're going to take a how Google stacks up against its competitors. And overall, we're just going to take a look at where Google stands as a company. So if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. Before we get into all that, let's take a look at Google's chart. So here today, they were down over 2.5% over the last 5 days. Again, around that 2.5% mark, down over the last month, 6%, 6 months down 24%. And year to date down 33%, over 33%. So they have been getting absolutely destroyed, but this gives us some context of where they're at right now, right? They have pulled back a lot from their highs. Their 52-week high is sitting at $151.55. Their 52-week low is at $94.38, and we are only $2 above that point. PE ratio sitting at an 18.29, which overall is very good. And their market cap right now is sitting at $1.26 trillion. Here we are taking a look at what $1,000 or actually £1,000 would look like after 5 years of being invested in Google. And what we have is £1,000 basically converted into USD is $1,319.50. And the growth over the last 5 years for Google is 93.61%. And that comes out to around 15% per year. And then over the last 5 years, if you had invested £1,000, you would have, or $1,319.50, you would now have $2,554.68. And what's very interesting about that is when you compare those returns to the Dow Jones, the S&P 500, and the NASDAQ, what we can see here is that over that same time period of 5 years, the Dow Jones has only grown by 27.72%. And that would have converted that $1,319 to $1,685.27. For the S&P 500, we see a return of 40.1% over the last 5 years, and that equates to $1,848.62. And then the NASDAQ having the highest return, and that was still only 57%, 57.7%, and that would have equated to $2,080.85. So we can see from that Google has far outperformed all of the indices, the Dow Jones, the S&P 500, and the NASDAQ. And a big reason for that is their EPS growth. And what we can see here is 5 years ago, they were sitting around $1.50 for their trailing 12 months earnings. And then just as a few quarters ago, back in 12/31 of 2021, we could see that they were at $5.61 of earnings per share. And what that equates to is around a 25 to 30% year over year growth of EPS. So with that, you can see that there's a discrepancy between share price growth and EPS growth. EPS is growing at a clip of 25% year over year, while the share price has only grown at 14%. And that discrepancy will lead to a lower and lower PE ratio over time and has done that over the last 5 years. And a lower PE ratio just means that you are paying less for the earnings that Google is actually making. And one of the things that I actually love most about Google is its market share. It has absolutely an extreme stranglehold over the search engine market. And we can see here that Google has 92% market share for search engines, with Bing only being at 3.33%, Yahoo being at 1.34%, and then a few others that no one has even ever heard of. So it's absolutely insane that Google has such a strong hold over this market. This reminds me of Apple on steroids, right? Apple has a stranglehold over the phone industry, the cell phone industry, and then you're followed up by Samsung with their Galaxy, but they are still so far behind. We have seen the iPhone has basically sat at 40 to 50% market share for a very, very long period of time, and Google has an even larger market share. I would compare it to something similar to also what you see with Visa. Visa has around 50% of all credit cards are a Visa. So it's absolutely insane how Google has such a strong hold over this industry and continue to market to a large group of people and run ads across their search engine. So why do I personally keep buying more shares of Google? And honestly, the reason is it reminds me of Apple. And I hate drawing so many comparisons with Apple. I feel like people do that all the time. But I remember when I first started buying Apple, it was actually back in 2018, 2019, when the market dipped on the trade war with China. I saw a lot of things happening. Apple had an amazing market share and still has an amazing market share over the cell phone industry. And there was a very good opportunity that came up when Apple dipped down all the way down into the 40s, 30s. And what was present there was Apple still had the same business. The only thing that was different is there was a lot of talk about things going wrong, things potentially tariffs being in place, whatever it could be. Everything was going wrong for Apple and people were worried about the business suffering. And in my opinion, when I looked at all those things, I saw them as short-term problems that were eventually going to be resolved. And the way I see Google right now is there's a lot of short-term problems, right? They're running into the problems with the market right now, with interest rates rising. They have an incredible balance sheet. We haven't even looked at that, but if we jump over here, we can see that cash and cash equivalents, they are sitting at $139 billion in cash and cash equivalents. They have so much money to spend that they will be able to weather any storm. We can see that their current liabilities are only sitting at $64 billion. So they have over double the amount of cash that they have current liabilities. So it's absolutely insane the position that they're in to keep capitalizing on lower, basically the market's heading lower. If they need to acquire companies to continue to grow, buy back shares, whatever it may be, they are in a great position to keep moving the business forward and keep their growth at a very high level. Another huge reason why I love Google stock is their valuation. They are sitting at a PE ratio of 18.29. When we look at where Apple's sitting, they are sitting at a PE ratio of 22.87, and Microsoft is sitting at a PE ratio of 23.69. So Google is already well below Microsoft and Apple when compared to their PE ratio. The only big tech company that Google is actually trading at a higher valuation compared to is Meta stock. And Meta I keep adding more and more of as well. Meta is sitting at a 10.51, which is absolutely insanely low in my book, and they are only at a 340.67 billion market cap. So they are absolutely getting destroyed right now, and I keep adding more and more of both Google and Meta. As a recap, I just love Google stock. I love where it's at. Its valuation is incredible. They have the best balance sheet in the world where they will be able to weather any storm that comes along, whether it's poor earnings, whatever could happen with the economy, they will be in good shape because of how much cash they have on hand. And overall, their stranglehold on the search engine market. They have 92% market share of search engine, and that is absolutely insane when you can reach that many people and target people with that many amount of ads and increase your revenue and basically dictate where the market goes in terms of digital advertising. So overall, I love Alphabet. I love Google stock. It is one of my top holdings and I keep growing it out. So let me know in the comment section, what is your favorite stock right now? What are you adding more and more of as the market keeps going lower? I'd love to hear it down in the comments down below. And if you like the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.